Well, welcome everybody. This is our fourth election event that we have hosted. We started these back in 2016, so we've done one in 2 presidential years, and now this is our second midterm presentation. So what we're going to tell you tonight, we're not pro or for anything. We're just going to tell you what we think that is going to, what the election is going to turn into, and how the outcome is going to translate into your money. Finally, just to prove that, I wore a purple tie, handkerchief tonight. So there's no like Freudian slip or secret message in what we're doing. So I didn't wear red or blue for that reason. So let's dig in. I had a funny slide, but so I'll just use the screen. The next slide was a blank slide. It's not in your deck. And I was going to say, I'm done, and I'm turning it over to Lexa. So anyway, that was the joke, but it didn't take our work since we're going to the slideshow. So to kick it off, the next slide I think in your deck is our 2022 predictions that we put out in January, and then we kind of updated those in June when we did our market outlook then. We said 14 things that we thought were going to happen in 2022, and we thought we would have a recession this year, sometime in 2023, or at the end of this year, sometime in 2023. Depending on your definition of recession, we could be in a recession now. I was doing some reading on this, and normally people don't run up they're into a recession until either 5, 10, even 5 or 10 years later after the recession. Like in 1999, the last quarter of 1999, a recession actually started, and it ended the first quarter of 2000. Well, there was a food fight, if you remember, between Clinton and Bush then and Gore about what the economy was doing, and there actually wasn't, textbook was a recession then. It's documented that there was a recession then, but no one wanted to own up to it at the time. So I think we're having the same thing now. We'll know if we're really in a recession because tomorrow, first quarter or third quarter GDP prints, the first time, and it's expected to be positive, but the last 2 quarters were negative. So we'll see if we're potentially in a third quarter of contraction tomorrow morning at 8:30. We said the U.S. markets would struggle and have a negative year. Actually, when I spoke, both in January and June, I said that we thought they would have a substantially negative year. And as of today, I think the S&P is down 20%. It was down almost 25 last week when the market was down, and the NASDAQ's down over 30. We said the global markets, emerging markets would struggle and be worse, and they have been. We said energy prices would increase. They have increased, and they have come down, but I'm going to talk about that here again in a second. We said commodity prices would increase. Commodity prices have increased. They have come down recently. Interest rates long and short would rise. They have. The 10-year has hit the high. The 10-year Treasury, which is what mortgage rates are based off of, is the highest level it's been in the last almost 15 years before the financial crisis. Short rates are the highest they've been in the last 15 years as well. The Fed fund rate's at 3.25, and now money markets actually are paying something. We said that inflation would remain an issue. It has. We kind of missed this one, but we tweaked it in June when we updated this. We said the dollar may weaken. I didn't really have a stance on it. And this is when you put stuff out a year in advance and you make bold predictions like this. You kind of put yourself out there. With the situation in Ukraine, and then also with the lockdowns in China, the dollar has actually strengthened substantially and has gone over parity with the euro for the first time in the last 14 years. And the dollar strengthened overall against other currencies for a litany of reasons. Unemployment would remain steady, and we'd start to see cracks in the labor market. We were starting to see that back at the beginning of the year. We had 11.7 unfilled jobs in America. Now that number is 10. It's not because people went back to work. It's because employers are cutting available jobs and are not hiring as much. And we think that that's going to continue. We've also seen a lot of tech companies lay people off or reduce workforces, are not hiring anymore. Consumer business confidence would fall. It has. Corporate earnings would be good through the third quarter. If you saw today at 4 o'clock, Meta or Facebook reported they did not make their numbers, and the stock is down 10%. And yesterday, 2 bellwether Dow components, both Microsoft and Google, missed their numbers. So we're starting to see what we thought would happen as the economy slowed. Companies would start to miss their numbers later in the year, and they have, and inflation substantially affecting bottom lines and top lines. You might say that we missed this one. We said there would be gridlock in DC. There were 3 pieces of legislation that have really made it through Congress. One was the bipartisan gun control law. 2 was the Build Back Better, and 2, Inflation Protection Act that was just passed. And the third one was the Transportation bill that was passed earlier this year. Every politician likes to put their name on a road, so I don't know that that was really a foregone conclusion. They finally got that over the goal line. So we did get some stuff through Congress. We said COVID would still be an issue, and it is. I saw a news report yesterday on Spectrum, and they said that Kentucky has 13 counties that are now in the red, mostly in eastern and central Kentucky, and so we see COVID starting to take a rebound. And there's also a shortage of ICU beds for infants because of COPD, or not COPD, but RSV and COVID and the flu for infants. So, and we said we'd have volatility again to the extreme, and we've definitely seen that. So, you know, at least we got 12, maybe 13 right of the 14. So we think that's going to be more of the same going into next year, and I'll get to that in a second. So the next slide in your deck is one that talks about S&P performance in mid-year elections. And that essentially talks about if you go back to 1962, every midterm election year, the S&P has been negative. And those are the little blue bars there that go to the bottom. And the green bars, if it came out in color in the smaller print, show the following year. And so what we think is going to happen is the rest of this year could be negative, or is going to finish up negative at least. And probably late next year, you'll see the market come with a rebound. And I'm going to talk about that here in a second. There's one slide that didn't make it in your deck because I added it. I forgot to add it before we printed them. Taylor printed them. It's a slide about what voters in the midterm think are the most important issues. And the most important issues, you may have a guess of what it is. It's not abortion. It's actually way down the list, believe it or not. Inflation. Inflation, the economy, jobs are the number one issues. And the slide is really cool. When it gets dark, we'll pull it back up if we're all still here. But it talks about, one, what the most important issues are, and two, what they think the current administration is doing about it and their feeling about the current administration, how they're handling those issues. The bad news, which normally happens in midterm elections, because usually the party in power loses seats in Congress, is the Biden administration is only getting a 30 or 40% score that the voters feel like that they're doing the right thing for all of those things. The only thing that he had a 50% score on was COVID, and that's probably going to change if COVID becomes a big issue again, I would guess. So anyway, the slide that talks about performance in election years, going back to 1962, we've had a negative performance in midterm election years, pretty much going back to 62, and most of the time it's double digits. The following year is usually double digits to the upside. So we do have that bright thing to look at. The next slide should be why is polling difficult? What's interesting about the election is everybody looks at polls today and they get a feel for who they think is going to win, and they either get complacent because their candidate's going to win, or they're non-complacent maybe because they get frustrated because they think their candidate's going to lose. What I would tell you, and if you follow polling, my degree is actually in statistics and political science and economics, and it was to be a spin doctor. And instead of selling my soul, I decided, and working for politicians, I decided I would use it in a productive way of helping people like you with your money. But polling today is really difficult. First reason is who will and who will not participate in polls. Wealthy people, Republicans, and conservatives typically do not participate in polls. They don't really hang up on people, and they skip out. Typically, Democrats, lower socioeconomic folks, and particularly women will oftentimes participate in polls, believe it or not. And so that's not something Todd Mercer made up. That's actually a fact if you look at polling, today's polling. What that does is it creates variance in polling. And so when you look out and when they do the polls and you see the margin of error in polls, they know, like in Jefferson County, they know how many registered Democrats there are. They know how many registered independents there are. They know how many registered Republicans are. They know how many black people there are, how many white people, how many Hispanics, how many Asians, how many women, and how many men from the Census Bureau data. So when they construct those blocks and they know what that demographic is, and then from the poll, instead of 50%, they get a 50% side of the Democrats, and they know there's 40% registered Democrats, then there's an oversampling of Democrats. So they have to weight the poll. Or if there's an oversampling of women, they have to weight the men's side higher. And so that's where all the statistical variation comes in. And the more they have to weight the polls for minorities, women versus men, Democrats versus Republicans or independents, that's where that margin of error comes in a statistical calculation based off of the weightings they have to come up with. So most polls, when you look at the margin of error, are anywhere between 3 to 5% off, which means if you have a poll that's 42% and 42% or 42 and 43%, and it's got a 5% margin of error, that poll really means nothing. It's a waste of time and a waste of money because it doesn't really tell you who's leading or who's losing. They typically say that most poll data, that Republicans normally are underweighted by at least 2 to 5%, depending on the sample and depending on who's done the poll. And there is bias in polling, and we'll talk about that in a second. We talked about margins of error. The other thing that's interesting is about, just with our team, Taylor, what's your area code on your phone? What is it? And what state's that from? Missouri. Okay, so mine and Lexi's is 502. Emmett, what's yours?
774.
774, so that's from?
Massachusetts.
So Rachel is not here, and neither is Andrew. Theirs are from Chicago and Illinois. Kayla, where's yours from?
618.
And where's
Southern
that
Illinois.
from? Southern Illinois. So of our team, 8 people who live here in Kentucky, 5 of our employees have cell phone numbers that are not in the state. So the way that most polls are done is by telephone. And if you are old enough to remember this, which I am, it used to be in Louisville, if you had a 244 number, you knew it was Middletown, 267 was J-Town, 447 was Dixie Highway, 895 was St. Matthews. So you knew where somebody lived by their phone number. Well, now you have no idea where people live by their phone number. Most people don't even, we were talking to somebody over here, and we were talking about, do you know your children's phone number? I don't even know my own kids' phone numbers because I dial it from my iPhone, so I just hit the button. So most people, I used to know hundreds of numbers in my head, phone numbers, but now I know just a few. So what happens now is people call a cell phone number to do a poll, and it's somebody they call Taylor because they're trying to get a poll in Missouri, and they ask her if she's a registered voter, and she says yes. I said, are you likely to vote? And they say yes. And then they ask her who she's going to vote for at Secretary of State of Missouri, and she goes, I have no idea, because she lives in Kentucky. But a lot of times people go take the whole poll or take the whole sample, and they get included in a poll, and it means nothing. And so cell phones and landlines have really, in addition to people not answering polls or having a bias, people have really screwed up the poll numbers so that it makes them more or less reliable. The other thing I would tell you is people lie. People don't want to tell who they're going to actually vote for because they're afraid that it's going to kick back on them, believe it or not, or they just don't want to tell the truth. And then the other thing is how questions are proposed, and that's a nuance like this, where they'll say, do you believe in a woman's right to choose? And that's a question proposed one way, which incites an answer a certain way. Or they may ask the question, do you believe in the right to life? And that's a question proposed another way. The same person may answer that 2 different ways, but the pollster now can interpret that into different things by the way that question is answered. So there's a lot of nuance in, I learned that in college and working for the LRC in Kentucky early on in my career. There's a lot of nuance in polling to get what you want it to say versus what people actually think. So the next slide in your deck, we're going to jump into, Lexi asked me about this. She goes, most people talk about the House first. And I said, well, really the Senate is really what is the big thing at stake right now. And the battle for the Senate, I read a site every day, or read multiple sites every day, but one of them is, I read the Courier Journal, USA Today, Wall Street Journal, New York Times, and then several other websites, CNBC, Investor.com, and then I always look at Real Clear Politics. And Real Clear Politics is an aggregation website. They don't take either side. It's not like Politico or some of the other websites that can maybe lean one side or the other. And all it does is it aggregates news stories and polling data. And so one of the interesting things that if you look at that website, they'll have like Republicans are awful people, Democrats have lost their mind, Republicans are the best thing ever, Democrats are the worst thing ever. It rotates the story. Every other story is a pro or either a left-leaning story or a right-leaning story. So you get a very good slug of what stories are out there. The other thing they do is they aggregate polling data, and they only use polls that are worthwhile or have good reputations. And so in the battle for the Senate, essentially, There's obviously 50 senators. There's 46 Democrats that are either not running for re-election or are they consider them safe or leans Democrat. There are 48 Republicans that are not running for re-election, are considered leans Democrat or leans GOP or likely GOP. There's 6 seats that are toss-up. So, and there are Arizona, Georgia, New Hampshire, Nevada, Pennsylvania, and Wisconsin. So if you flip over to the next slide, this gives you, the reason why I went through all of the polling data earlier to talk about how polls are skewed, if you look at the adjusted poll projections, which you kind of adjust for the error in polls, because they can go out and see, like Monmouth University is where I got the statistics earlier on what the best, or what voters are looking at. Monmouth University has a very good polling reputation, but occasionally they're skewed. So Real Clear Politics has data on all these polls going way, way back. Like Telfar is a right-leaning poll, and so they always skew to the right, that the Republican has more, is farther ahead or least farther ahead than before. So they adjust those for past poll error. So this is not Todd Mercer. It's not Todd Mercer cheering for anything, but what Real Clear Politics adjusted poll prediction is predicting is right now, as an example, in Pennsylvania, Fetterman is ahead in the RCP average of polls, 1.3%. But if they adjust it for previous polling error with the polls that are polling in Pennsylvania, it shows that Oz is actually ahead by 4%. And so they predict that the adjusted polling error is 2.7%, so they think that the Republicans will hold that seat that Pat Toomey is leaving, is resigning, or is retiring from. So New Hampshire, they feel like that New Hampshire Democrats are going to hold on to that. They feel like Republicans are going to pick up Nevada. And this was a shocker when I read this. They feel like that the GOP or that Masters is going to pick up the seat in Arizona. Georgia has a unique election law. We won't know who the senator of Georgia is likely until December 6th when there's a runoff, because they have to have a 50% win in Georgia. So there's a couple of independent candidates that will probably siphon off enough votes that Warnock or Walker won't get a full 50%. So if you go through this, the rest of them are holds for the GOP or the Democrats. They think that Murray's going to win handily in Washington. And so if you flip over to the next slide, it gives you the RCP prediction is, and I do agree with it again, and I'm not cheering for either side, but they agree that Democrats will probably lose 3 seats and the GOP will pick up 3, and so it'll be a 47 to 53 majority for the Republicans. Democrats will pick up 0, and the Republicans pick up Georgia, Arizona, and Nevada. So I guess we'll see, but that's the prediction of after they cook all the polls down, that's the prediction, and I tend to agree with that. I'm not sure if the rest of the team does, but that's what I think is probably going to happen. So battle for the House. Typically, I was researching this, there's typically anywhere between 20 to 70 House seats that flip in a midterm election year. It's not always that way. In 2002, there was only 5 seats, and in 2006, there was only about 4 seats that moved, if I remember correctly when I was researching this. There's 435 House seats right now. There's 175 that are pretty much secure for the Democrats. There's 35 that are toss-ups, and there's 225 that are pretty much secure for the Republicans. So if you flip to the next slide, this slide is actually from a different website. It's from 538.com. That's also another polling aggregation site. Nate Mitchell runs that site. And what they're essentially predicting is an 80% chance that the Republicans take between 213 and 247 seats. They need 218. And so if you look at the bell curve there, they're thinking the Republicans are going to get somewhere between most chances, or most of the trials, so they're going to get somewhere between 230 and 240. So it'll probably be a pickup of about 30 seats or so. So with that said, I think it's a foregone, I shouldn't say that. It's a very probably strong probability that the Republicans are going to take back the House. So what does that mean if we have a Republican Senate and a Republican House? What it probably means is everything that the Democrats have done to the Republicans in the last 2 years, they're going to flip the script.
Get it back to life.
So there will be, and I've got a later discussion point on this, but what you're probably going to see is a post-election euphoria, because I guess the word on the street will be, or in the media, the Republicans are going to jam the brakes on all the spending, all investigations that the Democrats have been doing are going to come to an end, and other investigations are going to come out. Now again, whether you agree with that or not, I'm just telling you what I think is going to happen. When reality sets in, when the Republicans shut the government down sometime in January, when we have to renew the continued resolution to fund the government, or when they shut down spending that has been pre-approved in some of the Build Back Better 2 or the Inflation Reduction Act or some of these other things, and Biden won't sign certain things and vetoes things, it'll get really ugly. That will destabilize the economy and it'll destabilize the market because of it. So in the first part of, when the Republicans first take over in January, and they start with, I can't remember what McCarthy has, it's kind of like what Newt Gingrich had back in the 90s, some kind of slogan that he has, 10 points of something or other. When that starts coming down the pike, that will start to destabilize the economy when the food fight starts between the administration and Congress. So even though if you're rooting for the Republicans to win, it may be good in the beginning, but it's not going to turn out good for a little while at least, because of the food fight that's going to ensue. So that is, somebody said, don't be so rosy tonight like you have been the last year. Again, it's not that I'm not rosy, I'm just trying to deliver the message and think that, there's ways to make money, there's ways to protect yourself right now, but it's not hunky-dory like it used to be, unfortunately. So, governor's races, that's the next group. There are 37 governor's races this year. One of the interesting things is Kentucky, usually we're behind on things, or we're woefully lost on things, but the state of Kentucky elected in their constitution at some point in time not to hold a governor's race in a midterm election year or a presidential election year because they did not want those issues clouding the state's issues. So even though we hold legislative elections on midterm or an even number of years or governors, that of course races on odd number of years when there's not a national election typically, at least the state constitutional officers. So we have 37 governor's races this year. 14 Democrats are secure. There's 12 toss-ups, which is a really high number. And then 24 Republicans are running, which are fairly secure. Interesting thing, if you flip over to the next slide, again, this is the polling average projections. And it essentially says that the Republicans are going to pick up 3 state houses, and they're going to be most likely Nevada and Wisconsin, and this was a shocker, Michigan. And if you watched the news last night, Gretchen Whitmer and Dixon debated, and it was an ugly debate. So they think that those 3 are going to pick up, and this is another thing about polling. In the average polling in Michigan, Whitmer, it shows it's ahead by 3.1%. When it's adjusted 5.1, it puts Dixon ahead by 2 because of the polling error. So that's pretty interesting, I thought. So RCP is predicting that in the governor's races, if you flip over the next slide, that there's going to be a three governor race, or 3 GOP pickups. So the Democrats will have 19 and the Republicans have 31 state houses. Why is that important? Why is that important to us in Kentucky? We don't have a governor's race. The reason why that's important is 2024. Because when the governor's mansion is controlled by the opposite party, it leads them to have a lot of opportunity and a lot of availability to do things. When the presidential candidate flies into town, the governor of the matching party goes to meet them and greet them, and it frees up a lot of money, a lot of access to power, that if you are not in the same party, it doesn't do that. So that's important for the Republicans in the 2024 race. Again, not taking a side, just telling you what's important and what's not important. All right, so this next slide talks about market returns during midterm elections, and it alludes really that I didn't make it up. And I've said this, if you've met with us recently, I've said I thought there would be a euphoria after the election if the Republicans win in one or both houses. I think my team, if you haven't met with us, my team can endorse that I said that. So, but this chart goes back to 1931, and it gives the average of midterm election years, the returns. And so you can see most election years are not great, going up to October. And then you can see they run up in late October, and then right before the election, there's a sell-off. So I can easily predict that next week there'll be a sell-off because there'll be this big anxiety about the election going into it. And then right after the election, you can see there's this big, no matter who wins, there's this big sigh in the balloon, and the market runs up. And then it kind of runs out the rest of the year, usually in a Santa Claus rally. So don't be surprised if between now and the end of the year, you see some volatility, but you also see a rally in the market. So I think that will be short-lived, again, because I think there'll be a food fight starting in January, February, if the Republicans do take both houses. Flip over to the next slide. Again, this just talks a little bit about S&P performance in post-midterm election years. As I have been not so rosy in the last 11 months about the markets, what I would tell you is they're going to turn. It's going to get better. And it'll probably get better, and I'm going to give you the crystal ball so everybody knows when the market's going to get better here in a second. It's going to get better next year because the Fed is going to do a lot of damage to the economy by raising rates and the long bond going up because of quantitative tightening. And after that, they're going to bring the punch bowl back to the party. And they're going to cut rates, and they're going to stop quantitative tightening, and they're going to do quantitative easing again. And that's the time when the market will turn. It'll take another year to 2 years for the economy to turn. It takes a long time for the economy to grow. We're still in a major growth mode as the Fed is raising rates and raising long-term interest rates through quantitative tightening. It takes a while for the economy to slow down, and once it stops and starts to back up, it takes a long time for it to go back the other way. But the market reacts immediately to those things in advance. So some things to watch for. So again, that chart, the chart that I showed before shows all years, and it also shows midterm election years, and that's why I think we're going to get a little spike playing out. Don't be fooled by that. It's probably a bear market bounce. And then if you look at the bottom right-hand corner of the slide that I just showed with the post-midterm election years, you can see after midterm election, the market, 1 year following midterms, the markets are normally at 15.1%. All years, the market's up 7% within 1 year on average after the same time period. So it's a double performance. So I don't think it's going to happen until late next year, but I think the market will probably rebound. And it won't necessarily be because of the election, it'll be because of Federal Reserve policy. So some things to watch out for next year. Inflation, Fed policy on short-term rates are going to continue to go up, probably 75 basis points in a couple weeks, or next week actually. Probably the open market operations are going to cause the long bond probably to go over, the 10-year to go over 5%, I would guess. Energy prices are going to come up again. The reason why energy prices have come down is because of the strong dollar, not because of lack of demand or increased supply. Unemployment is going to start to become an issue. Fiscal spending is going to start to dwindle, which is going to slow the economy, especially if the Republicans take back one or both houses of Congress. International policy, what happens in Ukraine, it's really going to affect, believe it or not, our economy because it's a major effect on Europe. What happens in China with COVID, the COVID lockdowns has a major effect on our economy because of supply chains. Earnings are starting to weaken, the dollar is going to continue to strengthen, and the housing market is obviously softening because of interest rates. So, which could bring commodity prices down because we're not building as many houses. So those are some things to look for. Again, I've already given you the big thing. This is the crystal ball. This is it. Write this down somewhere. The market's going to turn is when the Fed says inflation is under control and we're not raising rates anymore. That's the secret. So you don't have to watch CNBC ever again because we'll send out an email. It'll say the Fed said this and now the market's going to go back up again. But it's not going to go back up until at least mid-time next year when the economy slows down enough for the Fed to say that.